Now, I truly understand how hard it is to trade on a small Forex account. Well, sometimes you're going to make money and either blow it out or make some money and then lose it out all. I've actually been through the same situation and actually multiple times. But in today's video, I'm going to be sharing a practical guide on how you can actually trade off with a small account, be able to make money, and more often enough, actually be able to even grow up this small account. Now, without any further ado, let's dive straight into it. Now, the first step is using the right leverage. Now, listen, if you don't understand the concept of the leverage as a trader, well, more often enough, it's going to be against you. But the good thing is, if you actually understand how to use it, then you're going to use it to your advantage. So I actually did a presentation of here to actually show you guys. So as you guys can see, we are going to start off from this side. So say your trading capital is only $100. Now in here, just fill in the trading capital that you want to use. It could be $50, it could be $100, it could be $200 or any. Okay, so assuming this is your trading capital and this is what you deposit into your account. Okay, then in the middle here we have the leverage. Now remember, this is determined by most brokers. Well, you could say personally I use Excellence, and you can actually use the same broker. I'll put the link just down. I use Excellence and it has a leverage of up to 1 to 2,000. Now that's crazy, but let me just show you. So in this example, say we're using 1 to 1,000, pretty high, but let's just use this for the example. So if I'm using 1 to 1,000, then it means basically this is what the leverage does. So you're going to have the 1,000 times your trading capital. Okay, so it means so this basically means it's $100 times your trading your leverage, which is 1,000, and now that means you're going to have total trading power of 100k, because we have basically gotten the 100 times 1,000. Now it means you have total trading power of 100k USD. Now what's the problem with this? Now, obviously, I hope you guys can now see that even when you have less trading capital, more often enough, if you use a very high leverage, you're going to end up having more buying or selling power. And this is to your advantage. If I'm trading off with $100, I can actually even be able to open up slightly bigger positions than a normal trader who say used 1 to 10. Because off here, I can actually even be able to scale in more positions, as we shall discuss in the next minutes. That will say I'm trading off with $100, I'm going to open up 0.05, 0.05, then later on I can even scale in more. Why? Because I have a bigger or the best leverage. Now listen, I'm not encouraging you guys to use very high leverages, because at some point, as I mentioned, if it's too high, it's going to go against you. Sometimes most traders are going to be kind of convinced that, well, look, you have 1 to 1,000, this means you can actually open up bigger positions, and then someone is going to open up a bigger position that could actually end up blowing up the whole account. So you must understand the concept of the leverage. As I mentioned, it can actually be on your side or against you. So keep it average. Let it not be too small and let it not be too big. If say you're using 1 to 10, so say you're using 1 to 10 with your $100, then it means you have total buying or selling capital, selling power of $1,000. You see that difference? Because we're just getting the 10 for your leverage times your trading capital, which is 100, making it 1,000. Okay, now obviously, again, as I mentioned, this at some point it's going to be against you. Now if you are looking at trading and making money on a small account, you might have to use slightly bigger leverage. So I'd recommend you use from 1 to 100 to at least 1 to 500. If it's too big, let it not exceed 1 to 500. Now that's pretty good, and either way, it's actually also putting risk management into emphasis. Now if you want to learn more about trading and making money online, be sure you subscribe, and if you are enjoying this video, you can also smash the like button, and let's get back straight into the video. Now the next step is you understanding that you are trading off with a small account. Now you should be questioning, I know this, I'm trading off with $100. Now listen, small accounts actually vary. So $100 could be a small account, but it may not be a small account to me or any other trader. So it's up to you as a trader to understand that, look, with whatever capital that I'm trading off with, it's less capital. So I would say $100, or even up to 500 or even 1,000 personally. Now what does this mean to you as a trader? Well, it means you must be risk conscious. Okay, now after we're talking about the leverage, listen, you must keep your risk minimum. Okay, now I'm not saying, look, risk 1% of your trading account, because look, if you're trading off with $100 and you are risking 1%, it means you are risking $1 to make $2. because now I'm looking at it, say 1 to 2 risk to reward ratio. And well, it's going to take a bit of time to make money, and which is a thing. But on the other side, you could actually be able to trade more risk consciously. Say you are trading off with $100. I would say, look, open up 0.02 lots or 0.03, and then you're able to make say $9 or $8 off with that trade. But all in all, again, you must keep your account under risk management. Okay, I want you guys to understand that risk management is one of the pillars in trading. Well, it doesn't help us making a lot of money today because we are growing a small account, or we want to make a lot of money on this small account, and then the next day it's gone. Now, the third and the most important step is learning how to scale in more positions. Now, this could have actually been the biggest turning point in my trading back in the days when I was trading on small accounts, and I want to show you the same thing. So I'm just going to come over here to my charts and illustrate this. Okay, oh, by the way, I had a trade on gold today, and we could actually use this as a very good example because I mean it's good at the moment. Now, say you are in a position and say you're in for buys. Okay, oops, sorry. So say you had those beautiful buys. Okay, now what happens is, so say you took your entry right around here. Okay, so say you're trading off with a small account of say $200 or $100, and say you entered your buy 0.02 lots. Okay, now oops, lots. Now here's what happens. So if you have this position running, you are making money, right? Because for the fact that the position, the trade is going into your direction, you are making money. Okay, you guys can see that. Now, at some point, you need to scale in more positions. Now, check. So if we have this and it's in profits, and then we have a big impulsive push, come back for pullback, and then another impulsive move. Now, this is the perfect area to scale in more positions. Now, major highlight, remember, before scaling in more positions, first of it all, the first positions must be in profit. Then the next thing is the next lot sizes for all the positions that you're going to be scaling in should be slightly smaller than the first ones that you opened. Now, this is going to save you a lot of pressure, emotions, and all that kind of stuff. Because look, say you opened up 0.02, well, at least your next position should be 0.01. Let it not be big, because if at any point the position that you're scaling is bigger than the initial position and you're back in a drawdown, well, look, oh, I was actually making money and now I'm back in a drawdown, and I don't want you to fall for that trap. Now, let's just go ahead and then I can show you just a bit of a real life practical example. So I'm currently on gold. I actually had a trade running off today. So this is how we are looking. I could just go ahead and quickly draw out the levels that I had and then show you why I opened up the trade. Okay, so we had this, then we also had one more level right out here. Oops, sorry. So we also had one more level right out here. Now, I opened up my sales from, well, I think around this area. Not actually, right around here. Yeah, and then had my take profit up to somewhere down. Then my stop loss just slightly above this area. All I know, I didn't get stopped out, so that was a good one. Now, here's what happens. So I'm just going to go ahead and show you on M15. And by the way, on scaling up this, adding in or scaling in more positions, you can easily do that on smaller time frames. Okay, now here's a very perfect example. So on gold, say we have a push, right? Because I entered my sell from here, so this is a sell, and now we have a push, and this is profit, not so. Then we come back for pullback. Now this pullback even comes and forms a level, because remember, I always say, guys, the price is going to push, come back for a pullback phase, okay, or an exhaustion phase, push. So all you have to do is wait for these exhaustion phases. Now, obviously, here we are in big money. Then once we come back for pullback, we're going to go in a bit of a drawdown, then wait for the price to again regain more momentum. Obviously, more sellers coming in here, and now that's why you also have to come in. Then once the price is now back into the push, you're good. Okay, so what you must do is to wait for the price to show that, well, now there is more momentum. Okay, now it's not a thing that scaling more positions every time there is a pullback, because look, now in this case, say if we scaled in more positions right out here at this point, could have stayed in a bit of consolidation, and then the push could have come later on. So you must wait to see the move getting back on, so you're able to scale in more positions. So at this point, I would have entered in one more position out here. So we just say getting more sales off here, stop loss right around here, and then we are good. At this point, you can also even think about extending your stop loss to break even. Okay, so let's just go ahead and check one more example, say on JPY. Just go ahead and delete all the drawings firstly. Okay, perfect. Now you can just go over to H1 and see. Now, pretty good trade. Let's see. So say you were in for buys. Okay, now I didn't trade this, so I'm just going to, check out this. So say you are in for buys and you have your entry here, and then say your stop loss is 1 to 2, and this is how we are looking, right? And you're good in profits. Now at this point, I can just go to M15 and then let's see. All right, perfect. Now let's say at this point we are currently in profits. Now here there is no anywhere to scale in more positions, because look, the price is already still in a push phase. I don't encourage you to scale in positions when the price is in a push phase. Kindly wait for the price to pull back. Wait for it to show that again there is now momentum to push it back to the upside and scale in more positions. Okay, so as I mentioned, you adding in more positions is going to help you maximize on your profits, and also always remember to close off profits, okay, or extend your stop loss to break even, so your trades are running on risk free. Okay, so those are basically the 3 practical steps on how you can actually trade on a small account and be able to maximize off with your profits. Now if you watched this far, well, I'm super grateful, but remember, every time you're in, there is no looking back. Okay, it's either win or a win. There is no any other option. Now I'm going to put one video out here so you guys can actually watch it. It's a trading strategy, and I strongly believe it could be of a very great importance to you. Now you can also join our Telegram channel. The link is just down in the description below. See you guys in the next one. I'm out. Let's go.